Hi, everyone. I am Seven Investing founder and CEO Simon Erickson. Here at Seven Investing, our mission is to empower you to invest in your future. We do that by providing our 7 favorite stock market opportunities every month, but also free educational content such as this podcast. I'm joined by my fellow Seven Investing lead advisor, Matt Cochrane. Matt, today is, to introduce the show, an important day. Today is actually August the 15th that we are taping this, which is India's Independence Day. And we have a special podcast planned today. Could you talk a little bit about what we'll be discussing on today's show?
You're absolutely right, Simon. Listeners, as some of you might know from following us on Twitter, India's growing economy and middle class is an area of interest for both Simon and me. As U.S.-China relations grow increasingly tense, investors are left with fewer choices to invest in stock markets and economies with relatively robust GDP growth and a relatively stable political environment. This search has led Simon and I both to look at India as a possible place for more of our investment dollars.
Yeah, absolutely. And in addition to Matt and I sharing our thoughts about India, we think that it'd be even more valuable to bring in some perspectives from some other Indian investors as well. And so we've got 3 guests for today's show who will also be sharing what they view as the biggest opportunities and risks within the country.
Yeah, and I can't wait to hear the presentations. Later in the show, we'll be joined by Ramneek Kundra, who can be found on Twitter at IRAMNEEK, and Saket Reddy, who's also on Twitter at Saket Reddy, SAKETREDDY. But joining us first to give us a broad overview of India's economic and political structure before diving into his favorite India stock idea is Dhaval Kotecha. His Twitter handle is at Dhaval_Kotecha. That's DHAVAL_Kotecha, KOTECHA. And I apologize, Dhaval, if I mispronounced your last name. And listeners, if you're on Twitter, all of today's guests' Twitter handles will be included in the show notes and our site's article accompanying this episode. And all 3 are must follows. Dhaval is an IT engineer and long-term investor currently residing in Florida.
Welcome to the program, Dhaval.
Hey, it's nice to be here.
I really appreciate you spending the time with Seven Investing. Before we start talking about India specifically, could you start us off by just kind of talking about your background and what you kind of think of as your personal investing style?
Yeah, so for me, like I am coming from an IT background. I was born and brought up in India, and I moved to the US in 2013, and I have been living in Florida since then. And I work for a company which is a DSP in AdTech. People might have heard about the Trade Desk. And I kind of work in the same space as what the Trade Desk does. I help my company build the real-time bidding engine. But I am also a big fan of Seven Investing. And my thought process is to invest for the long term, pick the best companies which have secular tailwinds and keep holding them for decades.
Yeah, that's great. Go ahead, Matt.
Well, Dhaval, we just basically want to give you the floor. You prepared a fantastic presentation for us. So listeners, you're in for a special treat. Dhaval, go ahead and take it away.
Absolutely. Let me share my screen and get started.
This is an incredibly impressive presentation.
All right. If I can check, are you guys able to see my screen?
We are. And listeners, if you're listening to the podcast, make sure you check out the video on YouTube so you can see some of the slides Dhaval's going to take us through.
All right. So I'm going to talk about investing in India. I'm going to give a perspective on the Indian market overall and talk about the growth avenues in certain spaces in India, and then talk about my favorite idea on investing in India. So before I get started, I will talk about India's demographics. India has 28 states and 8 union territories with a population of 1.38 billion people. Right now, there's 50% of the population which is below 25 years of age, and 60% of the population is below 35 years of age. As you can see here, lot of states, and there you can predominantly divide this Indian country into like 5 major areas, which is the northern part, this is the western part of India, southern part, eastern part, and the central part. I come from the western part of India, so I have the perspective from the western side of Indian subcontinent, but I might be talking about the entire country. So there might be things where I might not be accurately talking about certain things, but we'll kind of go from there. If we look at India, there's a classification of cities based on the tiers. So the tier 1 cities, which are the bigger cities, they have better job opportunities, they have better international connectivity, and absolutely great healthcare, infrastructure, and education. The downsides being of like there's higher living expenses and more traffic and pollution. One such city, which I can say is Mumbai, where I have lived for a lot of time. I started my career in Mumbai. The tier 2 cities are smaller cities than the tier 1 cities, but they offer like better quality of life, and they have moderate living expenses when compared to the tier 1 cities. They have good infrastructure, healthcare, education, and transportation, but not as good as the tier 1. They have limited or no international connectivity, and obviously less job opportunities when compared to the tier 1 cities. So tier 2 cities would comprise of a city called Jamnagar. And the tier 3 cities are the ones which are not falling under tier 1 and tier 2. So the tier 3 cities are the ones which have poor infrastructure and poor connectivity overall, and people must move to tier 2 cities or tier 1 cities for better opportunities, because there's not great education or healthcare. So if people need to avail those facilities, then they need to either move to those cities or either go temporarily to those cities to get those benefits. Tier 3 cities have low population densities as compared to the other cities. So that's a city called Viraval. Now, personally, like I was born in a tier 3 city, spent most of my life in tier 2 city, and then moved to the tier 1 city for better opportunities. So I have the idea of tier 2, tier 3, and tier 1 cities on the whole. So this is how the transition is. And if I were to compare the US cities to the cities in India, then like Mumbai would be something similar to the New York City, Jamnagar would be something similar to Jacksonville, Florida, and Veraval would be something like Lake City, Florida, which is not very well known. It's a small town, but still people live there. I'm going to talk about the urbanization and the rising incomes of India. So what's happening here is 2005, there has been a big shift of people moving from the rural areas to the urban areas. So if you see the trend here, you will see that people are constantly moving from the rural areas to the urban areas, and they will continue to do so. So in 2005, the percentage of population per area in the rural areas is 28, whereas in 2030 is expected to be, in the urban areas it's 28, and it's expected to be around 40% in 2030. So that's a big shift. The Indian middle class, if I talk about that for a moment, we see that the Indian economy is projected to grow at a base rate of 7.5% annually to 2013. And majority of the people are moving from the lower income bracket to the upper mid and the lower mid brackets and the higher brackets. So if I were to put in a simple way, one of the four households today are in the high income and upper middle income segment, whereas by 2030, we are expecting it to be 1 in 2 households, and 70 million fewer low income households by 2030 is what we are expecting to be the case in 2030 in India. So talking about the population, the age of the population, the median age of the India's population. In 2018, the median age was 28. So right now in 2020, it should be somewhere around 28 to 30 years 28 to 29 years. In 2030, it's expected to be approximately 31 years of median age, whereas you compare it with the United States and China, the median age is 40 and 42. Now, if you have a median age of 28 and 30, that means a lot of people are like millennials and Generation Z, and we have seen in the US the behavior of those generation of people compared to the older population, right? So that's where the shift is happening in India, and the growth is going to be propelled by like the urbanization and the favorable demographics and the innovation that's going to happen in India. And along with that, there's the evolving consumer attitudes towards the new and evolving technologies. So I'm going to talk about the digitalization in India. But before talking about the digitalization, I need to give idea about local Kirana mom and pop stores. So growing up in India in a tier 2 city, this was the sort of stores that I used to visit if I wanted to buy a bag of chips or buy any items that I needed for day-to-day use. So any sort of grocery shopping or any sort of utility, like any sort of consumables that I used to buy from the Kirana stores. And these Kirana stores still exist in India. And if we look at the numbers, right, the Kirana pie, there are approximately 12 million such Kirana stores in India, which means that still 90% of the retail market is unorganized. And we have 1 trillion is what the approximate size of the Indian market. But what we are seeing is because of this Kirana stores, they are like the local mom and pop stores. They don't have the infrastructure and they predominantly operate using cash. So what's happening right now is there are companies who are enabling these Kirana stores to go digital, to take payments and allowing them to process payments using the apps like Paytm or PhonePe or using credit cards, right? So BharatPe is the pioneer in unified payment interface, which is a standard by the Indian government. So that's the payment solutions part. And they also do digital money lending, which is exclusively for merchants. So as you can see, it says BharatPe lagao, dhanda badhao. So that means you install BharatPe and you increase your business. That's what it means when they say BharatPe lagao, dhanda badhao. And they are enabling these Kirana stores to go digital by accepting the payments from any app. And they are enabling them to take the loans from BharatPe, right? And then they are also giving them these zero fee card machines with zero transaction charges and no rentals, and they are capable of printing out the receipts, right? Talking about the major fintech players, if I talk about the big ones, the Paytm is the biggest one in India, and they were the beneficiary of demonetization in India, which happened in 2016. And back in 2016, the Indian Prime Minister announced that like they were going to make the 500 rupee notes and the 1,000 rupee notes null and void overnight. And people were lining up to take out money in ATMs, and Paytm was there at that point of time, and it was the biggest beneficiary, because now people started transacting using the phones, and Paytm doing transactions. PhonePe is another big one, fintech player. Google Pay is also there. We have Amazon Pay, Jio Money, Beam UPI, and MobiKwik. So talking about the growth avenues, right? So because everything is moving from Kirana stores, India is getting into like the fintech. I would want to start with the e-commerce, which is one of my biggest thoughts on growth in India. But let me back off and talk about how the global trajectory, and it has been so predictable in different parts of the world. So what happens when the e-commerce gets started? So we have seen that trajectory in 3 different stages. So the first one is the cautious early adoption stage, where there's a less than 10% of shopper penetration. The second stage is the massification stage, where you see a kind of increase in shopper penetration. The prices are down, there's so many discounts, and then you will see a lot of investments flowing in the businesses which operate in that space. And the third stage is where the stickiness of the business. So people, it becomes a way of life for people to make to kind of leverage the e-commerce, and that's what we saw in the United States. That's what we saw in the China. So let's look at the China story, and then we'll compare it with the Indian story. So the China story, if we look back in 2007 to 2020 right now, the cautious early adoption stage, if I were to put it, it started approximately from 2007 to 2010, where we see that the online shopper penetration is almost like 8%, with annual purchase frequency per shopper approximately 20. And the gross merchandise volume in billions is approximately like $60 billion. So that was the cautious early adoption stage in China from 2007 to somewhere in the middle of 2010. And from that stage, from 2010 to 2016, we saw a massification stage where the online shopper penetration went from 8 to 30%. And there were a lot of investments by these big companies, Alibaba, JD.com, to build their logistics capabilities, improving the customer experience. And we see that like that trajectory kind of went from almost like $60 billion to around $600 billion on the gross merchandise volume in billions. And after that, we see that from 2016-ish or so to 2020, we are seeing from $600 billion go up to like $1,200 billion. And the online shopper penetration increased to say 45% compared to the 30% before the start of that stage. So when I look at the India story, right, I see that India is trailing China by 7 years in internet users. So China was there at like 41% internet users, like 41% of the population of China was using the internet in 2012, and we are seeing the same thing in 2019. That's a gap of 7 years. And then the number of shoppers, right? So percentage of the population who is shopping online in 2012, 18% in China in 2012, and 11% in 2019 in India. So approximately 8 years gap there too. You can see US is way far ahead of these players, but right now these charts look promising for India at this point compared to any other country here. Um, so if we see the Indian e-commerce market, right? So there has been significant investments made by a lot of companies in India between 2018 and 2020. And the expectation is that there will be approximately 300 to 350 million shoppers and 100 to 120 billion in gross merchandise value by 2025. Uh, if we see the online retail penetration, we will see that there's almost around 3.4% retail penetration right now. India with the CAGR of 36%, right? Uh, if we see the two countries listed here, Thailand and Malaysia, where there's very little online retail penetration, 2% and 3%, we see that there's a company called C Limited that we all talk about. And that is kind of making inroads in those countries. But what about India? Because India is growing at a rate of, say, 36% here. And we'll talk about the players who are in this market. So if I talk about the e-commerce place in India, two leaders in the space which are building their ecosystems. The first one is the Walmart Flipkart. Walmart Flipkart is the combined entity. Flipkart was the one which was the first e-commerce platform in India, and then Walmart came in 2018 and bought around 77% of the stake in Flipkart for almost $16 billion in 2018. Currently, Walmart, Flipkart, they are owning approximately like 30% market share in the Indian market. And they are building the ecosystem, which ranges from logistics to commerce marketplace to, and they have partnerships built with, say, Hotstar, which is owned by Disney. And then on the audio side, they have Ghana, and they have like various different things for OTA. Make My Trip is one company that a lot of people from the US know about. And then they are also having repair services and other consumer services like Vedantu and Practo and CureFit. Like Vedantu is something very similar to like online tutoring, and Practo is into like, say, healthcare. CureFit is what I would say, fitness. And on the financial side, they have the PhonePe, which is the same thing as Paytm. And they have like partnerships with Axis Bank, HDFC Bank, ICICI, and other financial services in India. And they have the loyalty program, which is the Flipkart Plus program. The second biggest player is Amazon. And we all know about this company, and it also has made a lot of investments in India. And Jeff Bezos visited India last year, and he invested $1 billion in the Indian market for the next 5 years to enable the small and medium enterprises to come and have their businesses set up on Amazon and leverage that platform to reach a lot of users across India, which they were previously not able to reach. So with Amazon, again, they are also having approximately 30% market share, and they have their logistics commerce marketplace, which, like, all these businesses are very well known to people in the United States, but these are some of the businesses that they either acquired or had partnerships with, Shopperstop, More, Future Retail. And they are also having their standard like Analytics Cloud, financial services platform. And Echo is one which is insurance platform, and they have the loyalty program as Amazon Prime. So this is the ecosystem for two of the biggest players. Now, I'm not going to talk about these two players. What I'm going to talk about is Reliance Industries and its Jio Platforms, which is one of my pure play pick for the next decade. To begin, Reliance Industries, I'm going to give some history of this company and where it started and where it is right now. So it was founded in 1960s by a visionary called Dhirubhai Ambani, and he started this company, and the company IPO'd in 1977. Uh, as you know, like cricket is a big thing in India, and these guys did their meetings by holding them in big cricket stadiums. This is a picture from one of their meetings, and what happened after that is Dhirubhai Ambani, he passed away in 2002. And after 2002, when he passed away, he did not have a will. So what happened was there were some issues between these two brothers. So he has two sons, Anil Ambani and Mukesh Ambani, and they had been running that company until that point of time, and they ran into some issues. And then what happened, their mother brokered that deal, and the company got split in 2005. And at that point of time, the market cap of Reliance Industries was $15 billion. So Reliance Industries and Reliance Anil Dhirubhai Ambani Group were the two companies that formed out of this split from Reliance Industries, where Mukesh Ambani got the assets, like the oil assets, which is the Reliance Industries and IPCL, whereas Reliance Anil Dhirubhai Ambani Group, he got into telecom, which is Reliance Communication. That's the primary asset that he had, and then Reliance Energy and Reliance Capital. So moving fast forward 2010, Reliance bought a company called Infotel, which had the rights to a lot of bands in government-run spectrum auctions, and that helped them come up with Jio, which kind of launched in 2016. And then in 2016, once Jio launched, 2018, Reliance Communication, that ran out of business. So in 2020, as it stands right now, Reliance Industries Group market cap of $186 billion, Reliance Anil Dhirubhai Ambani Group market cap of $240 million. This is $1 million, like not even $1 billion company compared to his brother, which is the Reliance Industries Group, Mukesh Ambani. So the businesses that Reliance Industries is in is polymers, chemicals, polyesters, petroleum, textiles, retail, in-store brands, and they have partnerships with a lot of other brands. But we are not going to talk about any of these businesses. They have their hands in almost every sector that you can name. Because of the COVID, people were locked down in their homes, and because the oil prices, they went down. Right now, what we see is Jio is the same value as all the other businesses combined in the Reliance Industries. So now what's the Jio Platforms? The Jio Platforms, giving a story about, again, the Jio Platforms. In Q3 2016 is when Jio Platforms was launched. They had almost 100 million subscribers in the first 6 months at launch, and that was like very, very popular. They started providing internet services to the users. They enabled each and every person in India to be internet enabled. Now, if we look at the plans that they have, they give internet services to the Indian people, like 249 rupees for a data plan for 2 gigabytes per day, right? So $249 would be something around $4 per month for getting 2 gigabytes of internet data per day. And coming to 2020 here, we are looking at approximately 400 million subscribers right now on the Jio Platforms. And this is a quote from Mukesh Ambani. He says that in this new world, data is the new oil and the data is the new wealth. And if we flip the logo for Jio, you can see that oil, and now it is Jio, which I found very interesting. And I didn't know about this at all. And this was, I'm sure that a lot of people would not know about this too. Um, so we have seen some serious money flowing in these geo platforms. There was a lot of buzz when Facebook started. Facebook invested a lot of money in geo, and then all these other companies uh, had their investments within like between April 2020 and July 2020. That's after COVID. All these companies in total $21.5 billion. That's an insane amount of money raised within a very short period of time by any company in the world. Um, and and these are the folks like they are banking on India to be their next growth story. Um, if we look at the Geo platform in total, these are some of the services which Geo has to offer. The Geo Connected Intelligence is their telecommunications. Geo TV is where they are aggregating all the video content across OTT apps. So you have Amazon Prime, you have Netflix, you have Hotstar, you have your Z5, you have other services like Sony Live. And what they are trying to do is they are providing these set-top boxes to all the consumers in India, and they are kind of aggregating all the content under one platform and enabling the media part. You have the cross-device marketing technology platform. This is very, very nascent, but it's very similar to what Trade Desk did in United States. You have the Geo Health Hub, and they are also making inroads in like what Teladoc and Livongo did in United States. You have Geo Cloud Store, which is very similar to Dropbox. They have partnerships with Microsoft and Azure to leverage their capabilities in India. And you have Geo Money, which is the same payments platform, and you have the Geo Meet, which is similar to Zoom. And I installed this app on my phone, and I could not make out the difference between Zoom and Geo Meet. It's almost an exact copy of what Zoom is. And the GeoMart is the e-retail part of the e-commerce part of Geo. And they are coming up with a lot of things like Geo Glass, where I saw a couple of months back where they were talking about AR and VR, the same type of glasses that Snap has come up with. And you see there's a lot of other things as well. I'm not going to talk about everything here, but this just gives an idea about how many things Geo is building. So ultimately, if there's something in India that you need to interact with, you are most likely going to use the Geo platforms. And this is their ecosystem, which is under the Reliance group. And you can see the ecosystem is what they are building is pretty impressive. Like the logistics part, the commerce marketplace, the entertainment, the social. They are also integrating this WhatsApp with the GeoMart, and also enabling the Kirana stores, integrating them with WhatsApp. Also, what they have done is Kirana stores, they are rebuilding those Kirana stores, bringing them into their ecosystem. So what they said was, give us 48 hours, we will remodel your entire Kirana stores. We will not have any impact to your existing business for those 48 hours. And we will make sure that we manage your inventory. We help you in doing any sort of inventory management, because what happened during COVID was a lot of these Kirana stores ran out of supply because they could not get the goods from their suppliers. But if they were integrated in the Reliance ecosystem, it is much more easier for these Kirana stores to get the supplies from Reliance. And Reliance has their data as well, that what the consumer is needing at a very, very ground level. They have a lot of services as well, like the Geo Health Hub. They have the Geo Cloud, the financial services, Geo Money, and the loyalty program like the Geo Prime. The other question is like, how can I invest in it? Like, this seems to be very impressive, but how can I invest in it? That would be the biggest question. Uh, Reliance Industries is not listed on New York Stock Exchange or NASDAQ. You can see the graph. There's just one direction, and you can see in the past year or so, this company has grown parabolic here. But even for long term, if you see, like, it's just from the bottom left to the top right. And talking about Jio specifically, it's not a publicly traded company in India. So even if any person from India wanted to buy in, they just have to invest in Reliance Industries. And disclaimer, like, my family owns stock in Reliance Industries in India. So, but Jio is going to be public. Like, there have been talks of them going to public. I'm not sure when, but I'm expecting them to be going public in the next couple of years, hopefully. Um, but for the US investors, the best way to invest would be to buy these ETFs, which have a very high weightage on Reliance Industries. These were the two which I found, which is the Invesco India ETF, which is PIN, ticker symbol PIN, and iShares India 50 ETF, which is INDI. Reliance Industries portfolio weightage for Indy is 14%, whereas for PIN it is 11.6%. And that concludes my presentation, and we can discuss about any questions that you may have.
Dhaval, that's just fantastic. Thanks so much for taking us through that. So how much of Reliance Industries now is made up by Jio?
So Geo is still a very small part of it, but it's growing rapidly, and the new money is flowing in Geo.
Right, absolutely. And so, like, you showed all those companies making investments in it. I remember, I think Facebook kicked that off like a few months ago with like a $10 billion investment. And the next thing you know, it was like all the other American tech companies were just throwing billions of dollars at it. I mean, it's essentially like, it's essentially provides the cheapest data service in the world, right? I mean, like you said, how much does that come out to American dollars per month? Like
$4.
Yeah, that's insane. And for 2 gigabytes of data a day. And does that come with access to all those platforms that you were talking about, like GeoMeet, or are those extra add-ons?
So GeoMeet is available on the Play Store, so you can just download and you can install in US as well. It's not necessary to be just installing from India. You can install from worldwide.
Dhaval, I hope you don't mind that I have 88 questions prepared for you here. Just kidding. I'll summarize with two. Your presentation was fantastic. I wanted to ask about the Kirana stores that are being retrofitted. You said that, Jio is going in and just saying, hey, we'll set you up for digital payments. And it definitely seems like that's interesting. But you've also got those international companies, right? Google's interested in doing that. Apple's doing, or Amazon's interested in doing that. When those Kirana stores are retrofit, does that lock them into using one digital payments provider, or can they accept 5 or 6 or 7 different types of digital payments at those stores?
So this is just to enable the Kirana stores to get access to the entire infrastructure, the digital infrastructure, but they can accept Paytm, they can accept PhonePe, they can accept any form of payments, they can accept any credit cards. But the data is utilized by Jio to make the decision. So this is a win-win for everyone who is in this ecosystem.
Yeah, that's perfect. It sounds a lot like, you've got Visa and MasterCard and Discover in the United States to choose your payment method. The other question I wanted to ask was role of government in all of this. There's a ton of money on the table there for those telecom companies. Does the government seem to protect Indian companies to develop this space and put restrictions on foreign companies, or is it the opposite, where they're actually taxing the Indian companies more because that's a source of tax revenue for them?
I would say Indian government is right now, they have a campaign called Make in India. So they are kind of having everyone. They are pushing for everything that is made in India, and obviously Indian companies stand to benefit the most out of this. And Reliance, again, the owner, the Mukesh Ambani, he is a very influential figure in India, and that is one more reason why I think Reliance stands to be the biggest beneficiary of all of this.
Right. And on top of that too, Dhaval, and correct me if I'm wrong, but it's kind of like all the American internet companies wanted to get into India, right? Because of its huge population, it's young, it's a growing economy, and the India government kind of like temporarily kind of put like stopped that a little bit because they wanted an Indian company to be the gateway to the internet, right? In India.
Yes.
So it's almost like Geo really is the gateway to the internet in India. And so that's why all these American tech companies are coming in and investing in Geo. It's kind of like their quote unquote tax to get access to the Indian market. I mean, is that fairly accurate to say?
Yes. Yes, that is absolutely accurate. And these companies were not able to go into China
Right.
for that reason, and now they are able to invest in India, and they see the growth. They could have done the same thing in China and grew from there. They could not do it because of the government intervention, but in India they have that possibility, and that's what they are doing.
Right. And so, I mean, if anything, the Indian government is going to support Geo so so an Indian company will remain like that in that top spot in, India's digital ecosystem.
Yes, yes, absolutely.
So I know I asked like how much of Reliance Industries is made up by Geo, but after all this foreign investment, like how much does Reliance still own of Geo? Like, what do you know what its stake is now after all these money has poured in from American tech companies?
I think, as far as I know, it was almost like a 45% stake
Okay.
in Jio. That is what the family owns. I don't know what the entire Reliance industry owns.
Right. Gotcha. Okay. Simon, you have any more questions?
Yeah, no, I'm just, Dhaval, what do you think about the Prime concept in India? You talked about e-commerce, obviously Amazon Prime is huge here in the US, that 2-day shipping.
Right.
We depend on that. Is India there yet? Do they have the logistics and the infrastructure, and consumers, do they even want something where you would pay a set amount per year for fast shipping?
Yes. So again, with Amazon, you have Amazon Prime in India. They will charge you 1,000 rupees for per year in order to get the Amazon Prime. That's the number which I kind of remember on the top of my head, which comes down to around $12, $13 per year. And Flipkart has a similar service called Flipkart Plus, and Jio also has Jio Prime. So Jio Prime is not exactly the same thing because they are still building that, but Flipkart Plus and Amazon Prime are the same in the same league, and Indian consumers are paying for it. Now, for Amazon Prime right now, what I talked to a lot of people in India, and what they said was they are using Amazon Prime primarily for the video content, not for the 2-day delivery at this point, right? Because the content they are shelving out in India has been like phenomenal, along with Netflix. So that was one reason that they were buying the Prime subscriptions. But again, that comes from the tier 2 and tier 3 cities. Tier 1 cities, again, they would be having the beneficiary, they would be the beneficiary of the entire ecosystem.
You say that one more time. The tier 1 cities are benefiting the most because they've got the internet connections, they can handle the video and all that. But tier 2 and 3 are starting to migrate to those larger cities and benefit from it as well, right?
Yes, and again, like the 2-day shipping and the benefits of these 2-day shippings, 1-day shipping, if that will be there, the tier 1 cities would be getting the first, and they would be the biggest beneficiaries, and then it kind of trickles down to the smaller cities.
Yeah, great.
Well, Dhaval, thank you so much for joining us today. Really, we're blown away by this conversation and this presentation. Thank you.
Absolutely, it was my pleasure.
Yeah, and once again, we'll put up Dhaval Kotecha's presentation, for everyone to see. We'll put it up on YouTube as well. Some fantastic slides he prepared here as we continue to learn about India this week. Thank you for tuning in to this podcast. Again, we are 7 Investing. We are here to empower you to invest in your future.